We can see that there's a strong relationship between the gold and the commodity cycle that move in tandem over the last 5 decades. And during the pandemic outbreak, the surge of commodity prices, it has affected the inflation numbers. And definitely it has affected many of us until today. In this tutorial, I will walk you through 3 keys. Number 1, my observation about these cycle. Number 2, about gold, the supercharge of the gold. What will happen to the commodities market? And number 3, how will that affect the inflation? Will it set at 3%? Now, before we discuss about this topic, please do take some time to read into the disclaimer down here. Now, I'm using wheat and soybean oil as to represent commodities. Of course, I can include many other commodities. You can find them in CME. It will give you a very similar reading. Now, let's go back to point number 1, the relationship and the cycle between the gold and the commodities that we could see across back in history. It moved so in tandem together. It peaked around the same period, around here, but it also trough around the same duration, and each duration is about 10 to 15 years. And especially for this one, it is so beautiful, and so is for this. And I suspect this cycle has ended just right before the pandemic started. And now we're moving into a new cycle. Now let's discuss about point number 2 here, that the surge in gold. And we could see that the surge in gold started somewhere at about 2005, and that's the beginning of the surge. And it continued to surge, and it continued to elevate itself. It pushed away from the commodity prices. Now, having said that, the cycle between the gold and commodity prices, it is still intact, though the gold have pushed away from the commodity. It's just the commodity is lagging and gold is leading the move. And that's what I'm seeing here. But you could see that the cycle still remain. And now we're entering into a new cycle. Now, let me just explain what happened to gold here. Why did it start to move up in 2005? And especially in 2007 and 8, we could see here. And it was during the 07 and 08 crisis, the introduction of QE, the massive QE, which is also an increase in debt. Whenever there's an increase in debt, gold surge. So again, in 2020 in March, during the pandemic, that's where they have introduced a lot of stimulus. Until today, the gold has surged even more. Now it's testing the previous high, and I believe that it will break above. Now let's look at gold technically. Very briefly, is that this is what we're seeing here is the yearly chart of gold. And in my opinion, the gold main resistance is at 1676. And over this last many decades, we could see that for the first time during pandemic, it convincingly broke above. And over the last few years, it stayed well above this 1676. And that's my reading here, is that as the US debt continues, as US dollars continue to seems to be weaker, I suspect that the gold will continue to be on the move. Now let's talk about the point number 3 here. How about inflation? Will it maintain at 3%? Now my reading is this, that first of all, between the commodity prices and the inflation data. Now we have to understand that the commodity prices will lead the data. Now it will take about maybe about 3 months or 6 months later, it may reflect in the inflation data. That's what I'm seeing here. Now, I'm concerned that the new cycle just begin, as we could see here. Let me try that here. The new cycle has just begin. That's what I'm seeing here. And my suspect is that the commodity is lagging behind the gold. Ultimately, it may kind of just pick up because in history, it move in tandem together. Let's look at the wheat market. And as we know that central bank around the world, they have a target, inflation target. It was 2% annually. So it makes sense that the commodity prices will be on the rise along the timeline. And that's what we're seeing here. I'm seeing a channel. But my concern is that if the commodity prices subsequently catch up with the gold, it may break above this channel and move along with the gold market. And that's a bad news because it also represents that the inflation will be on the rise. I always enjoy studying the correlation between the markets and to uncover potential opportunities. And I hope today's sharing it will be helpful in how we invest and trade. Feel free to leave me any comments below. I'd love to exchange ideas with you. Really happy that you stayed through this tutorial. You have many great trading weeks.